if you are not making profit when trading boom and crash, then clearly you lack one of these 5 things that I'm going to be mentioning, at least one, which means even maybe you might even be lacking all 5 of them, right? So watch to the end so that you know where you are missing out, right? What you have to control, what you have to do, right? So the first thing that you are most probably ignoring or not looking at is not trading with the trend, right? So I think you've heard this saying very multiple times, but most of the times you still find yourselves trying to go against it, right? So you are not trading with the trend. So that's number one. Most of the times, 100% of the times that I lost my money, I was not trading with the trend. I wanted to get that sniper entry. Like let's take this. Let me just shift to the 15-minute time frame. Right. So let's say over here. Let's take which example. Right. So let's say over here. I just see the market is going up, right? But I see that maybe I think the market wants to create an M here because this M over here failed, so it's creating what a 2 M, a double M over here, right? So it's a double M. We call it 2 when you're trading BTM, right? So I just enter maybe after this trend line breakout over here, blah blah blah, and I want to catch the sniper entry, and most of the times I enter, right, and I'm getting to a little profit, and then the market hits me, right? So I continued doing this for a very long time without even noticing that I'm losing a lot of money while trying to get sniper entries before the market breaks structure, right? So it's always better to trade with the trend, right? So when you want to trade with the trend, like over here, using this example, the same example over here, right? As you can see, the market was continuously creating a series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And right over here, right, the market was still creating a series of higher highs, right? So at least if I had waited for the market to break past this point over here, right, creating my first lower low, at least now I know that I'm in a downtrend. Now I'm waiting for a pullback and see if that pullback doesn't break the structure over here. And if it doesn't break that structure, then I am going to be entering my trade, right? But most of the times I wanted to get the sniper entry before the market even breaks structure, and taking a screenshot, posting it on WhatsApp, blah blah blah. That doesn't work, guys. You don't have to get the sniper entries in order to consider pleasing people in order for you to take a trade, right? So do what works for you. You don't have to get a sniper even if you enter. As long as if your entry point is okay, you don't have to get that sniper before the market breaks structures, right? So first thing that you have to do is always trade with the trend, wait for that breaking market structure, and wait for a pullback, right? So waiting for a pullback, you've got our flag pattern somewhere over here, right? And after that retest, you can just enter, right? And testing out that zone flip over here. If you don't know about zone flip, then check out my channel. I got a lot about that. Right over here, we tested that area and we continued going down. We broke structure again to the downside. Wait for a retest to that zone flip area again, to this new zone flip area over here, testing our 200 moving average. And as you can see, there's a little bit of an order block somewhere over here again, right? So just waiting for those major confluence trades, unlike wanting to enter for maybe a buy over here, right? Maybe I think that the market is likely going to create a W over here, so I want to enter over here when this green candle is being formed, right? Let me just zoom out. When this green candle starts being formed over here, let me take my pencil, right? When this green candle starts being formed, I start thinking, maybe the market wants to create a W, blah blah blah. When the last break of market, when the last break of structure happened to the downside, so you just have to trade with the trend, and if you don't oppose that, then surely you will be profitable. Then the second thing that I'm sure that most of you are not doing is you lack patience, right? The simple indicator of this is that of the 100 people that click this video, right, I'm sure that 50 have already clicked off. 50 are not even able to watch till the end to see what they are doing wrong. They don't even have the patience to learn about what they are doing wrong. So if you're still sticking around, I'm proud of you, and I know that at least you have a little bit of patience, though if you don't watch till the end, but I know that at least the concept of patience is still in your head, right? So that's why I put this point second, because I wanted to see how many people would click off, right? Because I can see how many people click off, right? But I'm 100% certain that about at least 50% have already clicked off, right? So you lack the patience, right? And with patience, you have to be patient enough to wait for a setup, right? This also goes in line with the first point that I was talking about not trading with the trend, right? Instead of being patient enough just to wait for that breaking market structure, like what happened over here, you just want to hurry into that trade and get the sniper entry and get the first entry, instead of just being patient enough to wait for the market to do what it wants first, to present its structure first. You don't even have the patience to watch your setup work or fail. So you should be patient enough to wait for that breaking market structure, then you enter. If you don't have the patience to wait for that breaking market structure, then I would suggest that you find entries that go in line with with the current trend, right? It's better that you look for the setups that are showing what that current trend. So like in this example, it was better to just look for setups that show that the market is going to buy, unlike for me looking for an M where it's clearly not, right? So that's patience, right? So with patience, you have to avoid the fear of missing out, right? That's why you jump into this trade too early, or you lose a lot of money, right? So the fear of missing out, yeah, that one is a big one, because most of the people just have this. They just see that everyone is talking about buying this, about doing this, and they also want to jump into that trade, right? And then with patience again, you have to be patient to learn at least one strategy at a time, right? Of course, there are many strategies, and I encourage people to learn many strategies so that they get a confluence, right? So, but learn one strategy at a time until you get it right. If you are learning trend lines this week, just make sure that you are practicing trend lines alone, right? And maybe next week you want to learn what zone flips, right? So next week I encourage that you'll just learn zone flips and maybe combining it with the trend lines that you already know, right? Unlike learning 15 different strategies at the same time, it's better just to learn one strategy at a time and combining it with the previous strategy that you were learning, right? So that you get those multiple confluence trades, right? Just combine the concepts that you know and adding one strategy at a time, right? You don't have to learn 15 different things at the same time. You're looking for, right now, you're looking for 15 different things. You're looking at the CCR, you're looking at the Ichimoku, you're looking at everything at the single time, right? You have to be patient with one strategy at a time, then move on to the next and see if it works for you or not. Because if you are testing 15 different strategies at the time, you don't even know which one works, which one doesn't, right? Then the third thing that you are probably not doing is you don't have a trading plan. You don't have targets, and you are comparing yourself with others, right? So all this is just summed into one thing, right? So you don't have a trading plan. Having a trading plan means that you say you write your rules down. Your rules down. You're saying I only enter if there is a breaking market structure. I only enter in line with the trend. I only enter if there's been a breakout and a retest of a trend line or a support area. I only enter when the market there's an order block or a moving average. I only enter when give the specifics, right? My stop loss, at the end of the day, the stop loss that I want is at most I want to lose $10. At most I want to gain $30, and having all that stuff, right? So I encourage you guys to have a trading plan, right? And have a trading journal also, right? If a trade doesn't work out, write down what do you think were your mistakes, right? Doing that, it helps you to know so that you don't make that same mistake again next time, right? So I encourage you guys to have a trading plan, right? And having a trading plan also and having targets, it means that you won't have to compare yourself with others. Maybe you are entering into trades too early because you want to compete with maybe your friend or whoever in seeing who makes the most profit, right? So you don't have to compare yourselves with others, because at the end of the day, we all have different capital in the market. You have different equities. Maybe you have $1,000 account and you want to be in competition with me when you have a $10 account. That doesn't just make any sense, right? So you have to trade or in line with what you do, with what you have, the type of strategy that you use. If you're a scalper, if you're a position trader, if you're a swing trader, if you're a day trader, the strategy that you use, the equity, the type of trader that you are, all these shapes which targets you must have in the market, right? So there's no key, there's no strict target that you should have per day, because it all differs from person to person. Then for the fourth thing that you are not probably doing is not being in control of your emotions. Being in control of your emotions is going to help you a lot, guys. If you're able to control your emotions, it's going to benefit you the most, right? Even in life, right? But I'm not talking about life today. I'm talking about trading, right? So over here, right? Maybe you lose $10, you lose $100, or you lose even $1,000, right? And you still have some capital, right? Of course, you are going to be hurt. Of course, you are going to be maybe a little bit angry. Of course, yeah, it hurts. Of course, losing money hurts. If you are not hurt after losing money, then I think you are the one with the problem. But being here doesn't mean that you have to come and revenge trade where there's no setup, where you don't follow your trading plan, right? So you should have the discipline to always follow your trading plan, regardless of which emotions that you feel, right? Regardless if you feel angry, greedy, or if you fear being left out, or if you fear entering or whatever, if you are able to control your emotions, then you are likely going to get those entries. You are likely to get you are likely to end up winning at the end of the day. Right. So be in control of your emotions. Then the last and the fifth thing, I'm sure that most of you are going to differ or complain about this one, but you're probably not depositing enough money. Right? Boom and crash requires you to deposit at least a little bit of more capital, because especially let's say you're trading ticks, right? If you get hit by one spike and you blow that account, and maybe after getting hit by that let's take for example maybe over a year. Right, so let's mark this area over here. Right, so maybe you'd mark this area over here, and you entered somewhere in here, and the market just spikes, gets you out, right? Swipes that $10 account, and it continues going down, right? You even get a proper retest over here. If we shift down to the lower time frame, ensure that there's a sort of like an M structure over here, giving us further confirmation to enter the trade, but you don't have any capital to enter again, right? So I like to look at equity as sort of like the lives that you have in the market, right? So if you have larger equity, you've got many lives, you've got many chances to come back into that trade, to come back and look for another setup. Even if this setup doesn't work, but you still have enough lives, you still have enough chances for you to get maybe this uptrend over here, right? So having enough capital helps you to win, right, at the end of the day, because you have many lives, you have many chances in order to get a profitable trade, rather than just saying that the first entry that you get, if it loses, you have already lost all your chances. You've already lost, right? So having enough capital and also practicing risk management, this goes hand in hand, right? So if you practice risk management, it means that you have many chances also, you have got many lives, rather than risking all that. Even you might have a lot of capital, but you just risk it all in one trade. I don't encourage you to risk all your money in one trade, right? So that's it for this video. And if you think that you want to learn more about booming crash, then I suggest you watch the videos on my channel.